Hey, welcome back to my channel. So this morning, just a quick one. I want to quickly bring to your attention just a quick review on Volatility 100, and then also show you a few things that I was actually trying to explain a few things to my guys on my page concerning other blocks. So probably this might be a second video concerning other blocks. Okay, and how to frame others around a valid order block, and when to see that okay, this order block is not valid, and then this order block is violated, or in the instance where you have continuous order block, where exactly to maybe enter a trade, especially considering the pips to be a lot. So typically, let me give you an example. If we have this is volatility 100, typically if we have this continuous bullish candles which has formed a very beautiful order block in this area. Okay, so if we want to enter a trade in this area, what do we consider? Which area of the trade must we consider? So are we going to consider entering trade here? How about if price reverses and comes all the way, looking at your account balancing, account size? So basically, I want to quickly take you through how to even frame your orders, even seeing an order block, because seeing an order block is not just seeing it for seeing sake, but actually framing your orders around areas where you would have little drawdown on your account and all that. Okay, so one of the criteria that I think I should just let it known to you is this. For instance, look at this high. We have this particular high here. Okay, and more often we have order blocks formed when they have met certain requirements. Okay, and let me just underline a few of them here for you. So for instance, if we have this is volatility 100, and price has already gone to take all-time high, it has climbed to all-time high, and it has formed this pinnacle here. Okay, and you can clearly see that the high that has been formed here is the most recent high that has been formed. And what can you see? Prior to this downfall here was this rise. Okay, but before the sharp movement down, take a note. When price got to this bullish candle, we had this bullish movement here. Let me just zoom out a little. We had this bullish movement here. Okay, and then we had another bullish movement. When we go here, price wanted to drop. It made an attempt, a failed attempt, and then the second one. Now, what you should know is this, that immediately you see such bearish candles here in such an area, okay, not necessarily seeing them this way, it may not communicate any information to you. Okay, but when you have this kind of setup, or you have one bearish candle and then you have continuous bullish movement into the upside, and then you see the downpour, immediately we have price closes below this, we have this order block, and price closes below it, we know we have a block formed. Now if we have a block formed, one of the things that even makes it more valid is this particular bearish movement here. When you have this bearish movement on the left side of this candle, it makes this bearish order block more valid. Why? Because this particular area shows an area where the institutions began to place their, or began to hedge their funds, they began to sell, they began to place their sell orders inside this area. Okay, so now more of the volume for this order block that you have here is inside this particular area. Okay, so the institutions actually frame their sell inside this particular area, and then they begin to manipulate price up. then after the manipulation you see the actual movement. Okay, so actually when you begin to have such setup, when you have other blocks, look, when you have a bearish order block, look to the left. You have such movements here where which shows the institutions placing their orders. It could be just one bearish candle, you know, like for instance like this. If we had this and then price moved this way all the way and broke down, okay, and formed the other block inside this area. So this is our other block, but this is where the institutions, and it gives you, it makes it on a bigger time frame, especially when you find this, it gives you a clear picture that now this is a very valid order block. So take note of this particular movement. I considered the body of this and this. That's how come I said this is where the volume is. If you have price coming back to this area, if price even trades above this, you realize that there will be a rejection, and price would trade within this. So when you have this, go down to your smaller time frames and look on the chart. You'll find a lot of such setups. Okay, and number two to validate your order block is anytime we have an order block, for instance like this is the area where we had the order block. Okay, now look at this, look at this, look at this. So if we have our order block here, I consider this continuous candles as my order block. Now look at what is happening here. Right after the break from the bearish order block, right after the breaking away from this, now look at what happened. Price actually gaps or leaves a liquidity void, a fair value gap here. There's a fair value gap, just this gap which was not closed and price rallied quickly away from, gives you a clear picture that this is a valid order block. Go to your smaller time frame, look it up on your chart. You'll find most of these setups. Okay, so immediately price gaps from this area, you find a very beautiful area. This actually tells you how sharp this block actually is. So normally when you're expecting price, what you're expecting price to do is price should come and close in on this, trade into this volume, and then we expect a breakdown. There might be some other liquidity when you break this time frame a little bit down. You might be other liquidity up here, but price may just quickly rush to grab but not stay in here, and then it has to break down. Okay, so when you have your smaller time frame, for instance, if this is an H4, but this is a 24-hour, it's a daily candle. If you have an H4, so you frame your trades inside this area. You frame your trades inside this area. Where is your stop loss? Your stop loss is always above this high. So this is how to also trade volatility pairs. This is something to reinforce or make you understand that other blocks, that reinforces other blocks. Okay, so it's not every single other block out there people preach is valid. Okay, so this is one of the things that sometimes reinforces other blocks. See it. Okay, see it so clearly, see it so clearly. You have a sharp movement, the smart money begins to hedge their funds. They did their buy, they did their selling in here, and you see they break down below it and they begin to take their profits. They begin to remove some of, get some of, just right below this low. This some of the, they don't, they are very smart. See, they began to take off some of their orders. So quickly, that is what happens when you see the market trading. Now let's come back to our chart and let me show you a few things. I was showing my guys, I was actually trying to explain a few things to them concerning price, and when we talk about a shift in structure, and also seeing where you can find a few other blocks here and there, yeah. Okay, all right. All right. Whenever there is a shift in market structure, okay, there are a few things we can note. All right, when there's a shift in market structure, there are a few things we should note. And you should even know, it should guide you to know when the market has also, I mean, gone, of course, and I mean, let's say it has broken the structure and has failed to continue that direction. So for instance, we have this particular chart. Okay, so we have this particular chart. Okay, and this is just an add-on. I mean, it's not basically about the other block, but this is just an add-on. We'll go back to the other block. I just want to make this video quick because so please, if you are new to this channel, I would like you to subscribe to the channel, and then just stay tuned because I'll be giving you more information. I mean, very relevant stuff here. Okay, if you are new to this channel, please subscribe and ask your friends to also subscribe and join. Um, because we are going to learn more here. Um, so let's go back to the chart. We have this chart. We have this chart here. You know, on a smaller time frame, this is on the 30 minutes time frame. We could see the price was trending. It moved here, formed a higher high, formed a high here, and formed a low here, and formed another lower high, and formed a lower low, from the lower high, lower low, lower high, a lower low, lower high, lower low. Then what happens? Price breaks structure quickly. Price breaks structure in this area. So guys, are you taking notes? Price breaks structure in this area. Okay, what must we necessarily expect for price? After price has broken structure, we expect price to retrace, come down into an ultimate entry. If we will go down to our smaller time frame, we'll find where exactly. So let me go down to my smaller time frame and give you maybe where specifically price did the what's how do we call it, price actually reversed. Okay, so where are we? Okay, so here we are, right? Here we are. Price breaks structure, retraces. This is the 10 minutes time frame. Look at exactly where price actually came. This is a continuous order block. Good guys, this is one continuous order block. Now let's calm down and let me even give you more clearer break. I'll show you something here. So we have one continuous order block from this area all the way down to this area, from this area all the way down to this area. Okay, now where specifically do you think within this order block price should reverse? Okay, now if you are not certain, what you do is that now you have to refine it and look at areas within the order block where it is likely price can retrace. Places within this order block where it is likely price will retrace. And now let's consider the PD arrays. For instance, if we have within this order block, do you know that we may likely find a few liquidity gaps? So for instance, we may have a fair value gap in here where price has yet not traded into. The price may have to come and take down the liquidity. You may find a breaker. You may find what else, a mitigation block, anything inside this area that price must necessarily rush and come and grab. So for instance, on the 10 minutes time frame, we are not finding any form of breaker here. What we are seeing is there is a gap. So for instance, there is a void inside this area which hasn't been traded. Can you see it? Inside this first candle, and this second candle too has another void. Can you see it clearly? And price trades deep into this liquidity void, trades deeper into it and takes the volume out of it. Can you see? So this bullish candle actually does it. This bearish candle trades deeper into it and then even wicks into the body of the last bearish candle. Why did price trade down and didn't reverse at this point? Why didn't price reverse at this point and run away and rally away? Why? Because there was more liquidity runs below here that price needed to grab. Let's go down to our smaller time frame on the 5 minutes time frame. Let's go down to 5 minutes time frame and see what we are talking about. So on the 5 minutes time frame, we have this. Okay, This is on the 5 minutes time frame, guys. Can you see? I hope you are getting the concept. This is our 5 minute time frame. So beautiful here. This is our 5 minute time frame. Now on the 5 minute time frame, you realize that inside this long bullish order block that you saw on the 10 minutes time frame, on the 5 minutes time frame, the order block is actually just from this point to this point. Now it's refining the order block for you even on the 5 minute time frame. And look at it. We had a void here. So price actually traded all the way and actually came to hit this last bearish candle here inside this, and there was a liquidity, and a fair value gap in here. And what happened? Price actually go here, and then just at the tip of this last bearish candle. So now if you refine the other blocks more, this is what you get. You happen to have that price will actually trade and come down to this last order block, and now it has even reduced your risk size, because your stop loss becomes smaller. Okay, you have a smaller stop loss. You place your stop loss here, boom, smaller stop loss, and you're good to go, guys. So basically this is all that you need to do when you find other blocks. Refine it much better so that you have a smaller stop. You refine it much further. Okay, you refine it much further. So basically that is all there is when you're trying to refine your other blocks into smaller time into smaller time frames, so that you can frame a very good low risk setup. All right. Then another important thing, let me go back to my 30 minutes time frame and explain what I was trying to actually get attention to on the 30-minute time frame. Oh, whoa. Guys, so pardon me for this. I'm not so used to analyzing on trading view, you know. I'm not so used to the analysis on trading view, you know. I don't know how that sometimes to really beat my chart down to. All right. So guys, I hope you are with me. I hope you are with me, right? Yeah. The price is actually taking off our chart and all that. You know. So trying to do some few analysis here. Okay, so I was saying let's go down to our 30 minutes time frame. So I show you a few things here. All right, good. So we are back to our 30 minutes time frame. So now I was trying to show you that if we have time, a break in structure, and to be more certain that okay, we are actually going to go bullish back up, you know, there are some points that you can frame an entry with low risk, and let me show you where exactly you can do those entries. So for instance, this was where structure broke, price traded back this way. Now the question remains that okay, so now we have shifted course from being bearish to bullish. So where did it begin from? It begins from this point. It begins from this particular point here. You get it? So you find your PD arrays within this area, that if price trades back into this area, you are bullish. You go bullish. So for instance, look, price traded and came down all the way back to this area, closed in on this small gap inside this area, and this is a bullish order block. What happened? Price rallied and gave you some pips in here, took down this high, Okay, and then you are good to go. Now watch what happened. Price retraces back into this area. The premise is this: should price break this low, the low that was formed right after, sorry, the low that was formed right after the break of the structure, should price break this low, we are no more bullish. We are going off course. So guys, this was what I was trying to paint the picture to you, that should price break this low, we are no more going bullish. We have reversed. Price has broken structure again to the downside. So if you are in a trade here, you have to exit. You actually have to put your stops just below this low, and then if it goes the other way, you are off. You are off course. Okay, if price breaks below this low, you are off course. So if price should trade and come down this way, you could still be in a trade. Put your stops below. Don't always think that you are always going to win. Okay, there is a shortfall to every strategy. Okay, and the market is operating with algorithm. And you see, so when price got here, what did they do? It actually broke down further and went to grab more liquidities further lower below, and you could see the price is now trying to find a way up into the sky. Okay, now price actually had to reverse now here on the 4-hour time frame, on the bigger picture. Okay, price has actually reversed on the 4-hour time frame and on the bigger picture. There's an order block on the 4-hour time frame that price actually is got bounced off. See such setup where you have a sharp movement into an order block and you have price retraces back into the sky. It gives you a premise that price is actually trying to go back up higher. Okay, all right guys, so basically that is all that I wanted to share with you today, and to make you have a more refined order block. Okay, so that you can have good entries when you're taking entries on the order block. So basically that's it for today. I want to wish you all the best. Subscribe to my channel. You can join my Telegram page. If you're more interested, let me know in the comment section. I can add you to my WhatsApp closed group. Okay, so wish you all the best in your trading and have the best of the day.